why did this order block work perfectly while this order block and this order block completely failed? Well, in this video, guys, we are finally taking a look at order blocks. This is something many of you guys have been asking about, and in today's video I will answer all the common questions, like, for example, what is an order block in the first place? What is the difference between, order blocks and supply and demand? What is the difference between order blocks and support and resistance? And we will also take a look at an order block trading strategy step by step. But alright, so before we can start identifying and trading order blocks, we of course first of all need to know what an order block is in the first place. And order blocks are basically specific areas on the chart, and in this video I will show you guys exactly how to identify them. But this is basically areas where large market participants, think about market participants like banks, hedge funds, or other institutional traders, have placed significant buy or sell orders. Or in other words, these are essentially the footprints of the smart money. So these are areas that are showing where the biggest and most influential traders have been active. And us retail traders like me and you can hopefully use the knowledge about the smart money to actually trade in the same direction, and as a result make money. But now then, what are the key concepts you need to know about when it comes to order blocks? Well, the first concept you need to know about is high liquidity zones. And what do I mean by this? Well, order blocks creates areas with high trading volume and liquidity. And this can then, in the future, these order blocks can act in a similar way as support and resistance levels. And by the way, guys, if you don't know what liquidity is, I highly recommend to check out this video right here. In that video, I go over both liquidity and also some important concepts called liquidity grabs and liquidity sweeps. And these concepts can be very useful if you want to trade order blocks. The next key concept here is institutional footprints, because order blocks basically reveal where large institutions have placed significant orders, giving retail traders like me and you insights into the smart money movements. This is very key. Last but not least, price reaction. And this is a concept that you need to have in mind throughout the rest of the video. And this is that when the price returns to an order block zone, it can often react strongly, meaning bouncing or stalling due to the concentration of orders there. Alright, so now when you know the very basics of order blocks, now you are ready to start learning about how to identify the order blocks. And first, let's take a look at these three concepts, and we will very soon move over to a real chart. But first of all, we need to learn about this. First, consolidation and impulse. And what we want to look out for is basically a period where the price was in a sideways range. Usually before the big move we're looking out for, we want the price to go sideways and tight. So first a sideways range, and then followed by a sudden significant move up or down. This is the two main things we're looking out for. And the last candles of the consolidation often define the order block zone. I will show you guys step by step how we can actually define the zones here. Another very key thing to look out for is volume spikes, because if we think that smart money, or in other words banks and the big boys, have actually traded on a zone and created an order block, we need to see evidence of trading volume. So if this is a real order block, we want to see high volume on that zone. As you can see, order block areas tend to have high volume activity as the institutions execute their large trades. Last but not least, this one is not as important, but multiple touches is something to have in mind. So previous price reactions at a level can actually help us signal an order block. If the price reversed sharply at a certain price region before, that area could actually be an order block. It can indicate that this is an area where the smart money are placing orders. But all right, so now let's take a look at the order block trading strategy step by step. And right now we are in TradingView. By the way, if you for some reason haven't gotten started with TradingView yet, I do have a special link. That link is both in the top comment and the description, and you can use that to get a free TradingView Premium for 30 days and $15. But all right, so let's begin here with how to identify the order block. And here, the first thing to look out for and the easiest way to spot them, at least in my personal opinion, is to look out for these massive candles, like for example, right here. This right here is what I call a momentum candle. A momentum candle is basically a candlestick that is at least 2 times as large as the cluster of the previous candles, but preferably I want this candle to be maybe 3 times or even 4 times as large as the previous candles. So the first thing I look out for is a strong momentum candle. But also remember here, let me actually go here to geometric shapes. This is a tool I'm using a lot, the rectangle tool right here. Also remember that in order to have a valid order block, we want to look out for an area of consolidation here, at least preferably before we see this strong candle. Because this is actually the area we will later on use to find entry levels. Like for example, right here, you can see the beautiful entry level we saw right here. And after that, you can see that the price actually exploded here to the upside. But now, and this is very important, and this is also a question I have been getting a lot, and that is, how exactly do we draw these areas? Because these areas are very important. And the answer here is, the truth about this is that many traders have slightly different variations on how to exactly draw these areas. But as a general rule of thumb, you want to try to include the consolidation area. You can, to just have if you want a mechanical rule, you can choose a certain amount of candles. Like for example, you can choose that you include 5 candles, so 1, 2, 3, 4, 5, and you include the whole bodies of all of these 5 candles. So after you have drawn out your order block and after you have identified this momentum candle, the next thing you do want to do, remember from earlier in the course, is that we need to look at the volume, because if smart money is really stepping in at this level, we should see a spike in volume. So let's actually analyze the volume right here. We can see that the move was right here. And if you go down here to the volume, you can see just as what we predicted, we saw a massive increase in volume. So this right here is a good sign. When you have followed all these 3 steps, you have your order block, you have the momentum candle, you have the volume, then we are all set. The next step here is a waiting game. So you can see the price goes up, but then eventually the price came back down, and you can see it came back down and then we touched the zone. This right here is our opportunity to actually enter. Some traders enter at the order block, some traders wait for the confirmation. So some traders would enter right here. Some traders would try to, maybe have limit orders, right? Maybe have limit orders at the order block. By the way, if you want to learn more about the different order types, I do have a video about that, and I will make sure to link it up in the corner and the description. I do highly recommend to watch that one. But here, another thing you can use to improve your order block trading strategy even further is to use price action. And price action is basically the study of how price moves, and included in price action we have things like candlestick patterns, we have things like how prices reacts to certain levels, like for example how the price reacts to order block. And if you look closely right here, you can actually, if you look at these 2 candles, we can actually see that this is what we call a BE, or in other words, a bullish engulfing pattern. This is a bullish Japanese candlestick pattern indicating a move here towards the upside. So here we actually had yet another bullish sign indicating a move upwards. So after we have seen all of these bullish signs at the same time, we're ready to actually buy. We're ready to use our long position. If we enter here at the candle close of the bullish engulfing, when it comes to stop loss, some traders set the stop just below the order block or just below the pattern. In this case, I would actually set the stop loss just below the pattern because it was a massive pattern. And then using a risk to reward of 2, our trade would have looked something like this, and we would have locked in some nice profit. But alright guys, so in order to use order blocks effectively, I highly recommend to learn more about price action. And luckily, I do have a full price action course right here on YouTube. Simply click or tap on the screen right here, and I will see you guys over there very soon.